When it comes to investing, it is essential to know the different investment options available, including stocks, bonds, and mutual funds. Each of these investments has its own advantages and disadvantages. Understanding how each investment vehicle works enables you to make smarter investment decisions and increase your chances of achieving financial success. In this video, we'll explore the differences between stocks, bonds, and mutual funds, and discuss the importance of each to securing your financial future.
By the way, if you like this type of content, be sure to hit the like and subscribe button.
Stocks. Stocks are a form of ownership in a company. When you purchase a stock, you essentially buy a small portion of the company. As the company does well, the value of your stock will increase. On the other hand, the stock value will decrease if the company performs poorly. Generally, stocks are high-risk, high-reward investments. For example, if you purchase 10 shares of Apple stock at $50 each, your total investment would be $500. If the value of Apple's stocks increases to $75 each, your 10 shares would now be worth $750, giving you a return of $250 on your investment. Meanwhile, if the value of Apple's stocks decreases to $20 each, you would now have an asset worth only $200, resulting in a loss of $300. Bonds. When you purchase a bond, you are basically lending money to a financial company or government. At the end of the bond's term period, the institution will pay back the money you loaned them with interest. For instance, if you purchase a 10-year U.S. Treasury bond worth $1,000, the U.S. government will pay you a fixed interest rate of 2%. This means you will receive an annual return of $20 on your investment. At the end of the 10-year period, the U.S. government will pay you the original $1,000 you invested, plus the accumulated interest of $200. While bonds provide a steady and predictable rate of return, they do not offer the same potential gains as stocks. Mutual funds. Mutual funds are a combination of both stocks and bonds, including other asset classes. Buying mutual funds means investing in a diversified portfolio of stocks and bonds. Generally, you are spreading your money across a wide range of investment vehicles, reducing the risk of losing your entire investment. Additionally, mutual funds offer the convenience of diversification. Instead of having to invest in multiple stocks and bonds, you can invest in a mutual fund and have a professionally managed portfolio. A mutual fund is typically handled by a fund manager, which can be beneficial if you are not an experienced investor. However, it is important to remember that mutual funds come with fees and expenses, so be sure to research the mutual fund you are considering before investing. Which investment option is best for you? When deciding which investments to make, it is crucial to consider your risk tolerance, time horizon, and investment goals. Risk tolerance refers to the extent of your willingness to take on the possibility of losing your investment. Stocks tend to have higher risk but also higher potential for returns. Whereas bonds and mutual funds generally have lower risk, however they also come with less potential for gains. Time horizon is the length of time you plan to invest. Short-term investments generally have higher liquidity, meaning these assets can easily be converted to cash. Conversely, long-term investments tend to be more illiquid. Knowing your investment goals is also essential when selecting the right investments. Different types of investments can help you achieve different goals, such as saving for retirement, building an emergency fund, or growing your wealth. Investing in stocks, bonds, and mutual funds can help you grow your wealth over time. Each of these investments has different risks and benefits, so it's important to do your research and understand each type of investment vehicle to know which one is right for you.
We hope this animated video has helped improve your financial literacy. We do our best to provide actionable tips that are easy to digest and implement in real life. If you want to see more of these videos, please leave a like and subscribe to our channel. Also, comment what you've learned and comment what you want to learn about money in the future. Thank you so much. That's more than enough to help us grow and sustain our production expenses. See you in our next video.